Okay, mic check, 1 2 1 2, mic check. Okay, mic check, 1 2 1 2, mic check. Hello everyone, welcome to the Pro Trade Room Plus and Core PPI. My name is Lee Goldstein. I'm the Trading Director for 10-Minute Trades. Please remember I'm not a financial advisor. It is possible to lose money trading futures, so trade carefully. Let's get started. want to welcome everybody. Thanks for coming. All right, so let's give everyone a minute to get here. We are streaming on YouTube, so thanks everybody for watching us on YouTube. Can you all hear me fine and see everything we need to see? We'll put our webcam in here somewhere. Okay, everybody good? Okay, sound is good. Good morning, Chantal. So PPI. We really are looking at one setup for the PPI because that's what this trade has shown that it works as. We've tried over the years trading it many different ways, and we almost always come back to the trap trade. So that's what our setup is. It's a trap trade. Now, a couple of things you want to be aware of. So this is definitely a very high risk event. It's high risk for a whole collection of reasons. One reason, the brokers have raised the margin. So if you're trading in a cash account, you have to have more cash in order to cover your trade. And when the brokers raise margins, it means that they expect extreme volatility, bigger moves than average trades. And that's, it's extra risk. So I'm not trying to scare people out of the trade, but you just want to be totally aware that it's a very risky event. I mean, it just is the way it is. Um, so what's a trap trade? We have a setup. A trap trade is a trade where we think the news is going to come out. There's going to be a move in gold because we're trading gold, and then it's going to change direction, and that's how you make money on a trap trade. You make money when the move changes direction. So it's essentially a reversal trade. And we have what we call a zone of safety that we try to create with a trap trade. So we do our normal research, okay? And we've been looking at trap trades for all of these months, okay? It's at the PPI, and we've looked at the trap trade setup for all these months, going back, it's more than a year, okay? And the biggest spikes that we've had over the past 12, 13, 14 months or so, 75 ticks. And it was in July and it was in May that we had those moves. All right. So the outer tier with a trap trade, we have a setup where you have tier one and tier two. The outer tier is 70 ticks, and we have a stop of 25. So our zone of safety on the move that occurs when the news is released is 95 ticks. And you can see we've not had any 95 tick moves. So our setup, obviously in theory, should be fine for the trade. That doesn't mean the trade worked, but it means when the news came out, it didn't blow through your stops. And that's what we mean by the zone of safety. Now, on a trap, you can, because they've raised margins, and when you put a bracket trade on the chart, it's like putting two trades on. So a trap trade is double that. You have even more trades that theoretically the broker thinks you're putting on. So you could trade just the outer tier if you want to, if you want to reduce risk. So I'll show you as I set up our trade. Let's just take a look at what happened in July on this report. And we traded it with the DMM. and we traded it, the normal way that everybody is expected we're going to trade it today. So we had tiers of 55 and 70. We had the same setup. So a trap trade, what happens is it puts two orders above the price, two orders below the price. When the price goes up, we sell. When the price goes down, we buy. Okay? And interestingly, we did have a ZF trade. It's not on the DMM. This is the kind of event that very often it moves many, many different instruments. Okay? And if you really want to take a risk, because we don't know for sure if you're going to have a breakout day that works on extra instruments, or on gold, it's very often a reversal. It's just the way this report seems to go on gold. It reverses often, often, often. But and on many other instruments, it can be whippy. So it's not an easy breakout. But if there is going to be a breakout, and it's an if, ZF is not too terrible a risk to take because it's less than $10 a tick. It's $6 and change, $7 and change a tick to trade ZF. It has good liquidity. And that's what people did last month. We traded a separate ZF setup. And I'll just show that one more time. Let's go through the video, the longer video. We also had Citibank that last month. So I'll go through the gold setup there. So we've got enough webcams on here. It's crazy after a while. So on ZF or ZN, we had a bracket of 8, targets of 6 and 15 with a stop of 12. I just want to make sure that's what we did. 6, 15, and 12. Okay. That was on ZN. And ZF is ultimately what I would say if you want to take a shot and you don't like the trap trade or you don't like trading gold, or you just feel like you have to trade this report, there's certainly a possibility that bonds can move on it. We don't have, steady every month testing on it, but this is the kind of report that sometimes you get that breakout for everything, and many instruments work as a breakout. So that's why we did bonds. I just watched the bonds. Okay. I set up a sim on it as we traded the trap trade in our prop account. This is a high risk report. High risk reports, you want to just trade as smart as you possibly can. Okay? That's that's what we always recommend. Trade as smart as you can. So again, we've got our spike sheet. 75 ticks. The last 2 months, we've seen bigger moves on this report. So of course, you're thinking we are thinking always in our setup, should we make the tiers a little bigger? You could go 65 and 80. It would not be terrible. What's the worst that happens in a high risk report or in a trap trade? The worst that'll happen is you won't get filled, right? I mean, other than being stopped out, of course. If our setup is too big, you don't get filled. It's a very risky report anyway. It's not a problem if you don't get filled. So it is not unreasonable to trade 65 and 80 on the tiers. I would not try to talk anyone out of that if they wanted to possibly reduce the risk a little bit because we are seeing bigger moves. Because look, May we had 75, June we had no reversal and a big spike. It would have been a failure trade. And then back to July, you had 75 ticks again. Okay. So it would not be unreasonable. And in fact, I think that's exactly, I'm going to go for conservative safety today and do a 65 and 80, okay, with the same stop. Because I know the worst that could happen is that maybe I won't get filled. That's the worst that could happen. And I'm not going to go cry in a corner if I don't get filled. I'm okay with it. I don't mind. Because I know, first of all, we made money this morning on Home Depot. That's a trade that it's a family money trade. We always take it. We get up early, and we've had winner after winner after winner on Home Depot. So the ones that we love the most, those are the trades you know you're going to take. And the ones that are risky, you make a decision. You can trade safer if you want to. No one is going to think you're a baby. No one is going to think there's something wrong. It's fine. And you have to accept. Yeah, I would use a 25, Robbie. 25. You have to accept when you trade a system that has many, many, many events, it's you have to just accept some events you'll trade, some events you won't trade, some events are performing great and you'll try to trade those if you can. Some events are coin tosses and you make a decision on those. It's not really that complicated. You try to trade the best performers of the best performers. So here's what I'll do today on the trap trade. Choose the trap trade. Now, ironically, I have to update my software today because I was doing some testing, so I'm running the old version of the software. So my apologies. Um, there's nothing wrong with when I say old, previous, and we've just recently updated our software. So let's look at the DMM and let's make sure everybody's on the same page. So what we're going to do is position size 1 is a 1, position size 2 is a 1. That's how you determine how many contracts you're going to trade. If you're only going to trade one tier, then position size 1 is a 1, position size 2 is a 0. The stop is 25. And then tier 1 is 65. Tier 2 is 80. The time of the event, if you're using the new version of the software, it's 8/29/55. 8/29/55. If you haven't updated your software, the time of the event is 8:30. 5-second activation prep and turn off your account warnings. So the difference in the new software is you put the exact time of the trigger, 8/29/55. Okay? And then I label it a trap trade. And I'm trading in our Buell Knox account today. That's how we've been trading this report. And there is no margin in the prop accounts, right? It's done differently. You have limitations on how many contracts you can trade based on the type of account that you signed up for, but the margin situation is completely different. It's just the way the prop accounts work. So again, let's say you want to trade the trap trade. but you just want to trade one tier, so that means you're looking for the bigger move, which is certainly possible on this report. The market could just move in one direction. It's entirely possible that that could happen. So you could do a position size 1 equals 1, position size 2 equals 0. The stop is the same. Tier 1 becomes 80. Okay? And then tier 2 is a 0. The time of the event is the same, 8:29:55. Okay? Everything else is the same. You're just using one tier. That reduces your risk in half. So the trap, when you enable a trap trade, make sure that at the top you can see the BE button, break even, the close button, okay? Close the trade. Adjust we don't use. Cancel the outer tier. If you're trading two tiers and only one is filled and the report should start to reverse, we would cancel the extra order that hasn't been filled. And I will make sure that I say that out loud if I'm doing it so folks know. If you've never traded a trap trade before, trade in sim and practice so you understand how to do it. And then there's a combine button, which combines open orders, multiple open orders, into one order closest to the current price. Okay. Now, if you last month we did set up a bond trade, and it did work. I mean, it's the kind of situation that you can get everything moves, right? And you get a good breakout. It's possible. But it's not on the DMM because there is extra risk in doing this type of a trade because you don't always get everything works. Breakouts for all, we call it. If you didn't update, you won't. If you didn't update, you will have a choice for activation prep, Adam. So if it asks you activation prep, your time will be 8:30 and you put in 5 seconds. The new software doesn't ask you that, and it's also labeled version 11. It's if you don't have the choices, you don't have to worry. It's it means you have that the choices that you have tell you what version of software you're running. So bonds, I'm going a bracket of 10, ZF, targets of 8. I think you can use targets of anywhere between 8 and 30, a stop of 15. And I'm not trading bonds live because I'm just watching the trap trade. Trap trades often have to be managed, and I don't want to be totally distracted by a second trade. Okay? But bonds 8:29:58 is the trigger time, bracket of 10. Targets anywhere between 8 and 30 is fine. The stop 15. And if my first target should be hit on bonds, I would move my target, my stop, to break even -4. And I label it ZF, apply it. And I think what I'll do is let me save it, save the template, PPI, ZF, today's date. And then if I set the time to 0, I can look at my brackets and see that they are lined up nicely on the chart. See how they're too wide, so I'll shrink them down. Bonds are in a pretty tight range right now. So That's why you've got lows and highs very close. We're right. Lows and highs, everything is right on top of each other because the market's waiting for this news, most probably. The market is waiting for this news. I would say that there's a good possibility of that. Okay? So ZF. And I was just watching micro gold. I don't want to put on so many trades that you can't keep track of everything. So I don't want to set up a situation where I can't keep track of everything. So what I'm going to do is just, instead of a third chart here, I'm going to put on a secondary trade on gold. Now the gold market is opening right now, so you're seeing a little bit of volatility. I'm just putting on a reversal trade in gold. So it's a second event on the same chart. I'm calling it reversal continuation. Just one position, a target of 20, and a stop of 20. And I wouldn't even consider doing it unless the trap trade doesn't work, or maybe it doesn't get filled and we see that there might be another opportunity. It's if something happens and there's an opportunity to use another way of trading the event. That's why we do this secondary. We call it a secondary setup. It doesn't matter what you call it. You can call it a reversal continuation. That's what we like to call it. And when you enable it, it puts buttons on the chart that let you enter the market instantly, long or short. But it's like an ATM. It's like an ATM, an automated trade manager. So Adam asked a good question. You can do it on the same account, Adam, but you make sure you don't try to trade both events at the same time. You have to wait until the trap trade is 100% over. Then you can trade the same instrument. Otherwise, it must be a different instrument, like micro gold, or a different account. Correct. Okay? But it can't be, you don't want to try to trade two events with the same instrument. It'll screw up the events. The ZF bracket was 10. Okay? ZF bracket was 10. Targets anywhere between 8. I was using 8 and 25, Frank. I think reasonable targets are probably 8 and 15, with a stop of 15 is what I used. Keeping in mind, of course, that it's not an official setup. Bonds, we're trading it. There's a probability, certainly, it's a probability that bonds could move nicely on this report. We did it last month, and they did move nicely on this report. But this report, to our way of thinking, has been better as a gold trap. That's our chosen methodology on this report. Okay? You could see gold is active. No surprise that gold is active. Let's go back. Let me see what happened in June. June seemed to be a very big move. Let's see if it's reflected in the room. So this was June. We had a trap. We'd been doing some YM testing on this report that really hasn't panned out that well. The trap got filled and it kept going. And that's the enemy of a trap trade. It fills and keeps going. So that was a move that was just way too big for our setup. And that's why I increased the setup today. There is a possibility we could get an outsized move. It's possible. Sometimes the funny thing about trading these high volatility reports Sometimes the market does the exact opposite of what you expect, and you get the smallest, littlest move. And I always laugh when I see that happen. A lot of times we see that happen. If you look at what's going on this coming Thursday, we have retail sales, unemployment claims, Philly Fed, and Empire State Manufacturing. Four reports. All four of those reports, we could actually trade them all by themselves. Now, obviously, retail is probably the number one impact. And then very close behind is the unemployment because the market is really watching the jobs market right now with what's going on with the Fed. But make a long story short, a lot of times you have that much news and everybody gets all worried and you think that, oh, you better not even trade it. It's too much news. And then you get like the smallest move. And it's like the market always has a way of just making you crazy. I mean, that's all I could say. The market will make you crazy. But PPI, this is ironic, not ironically, but usually CPI comes first in the week, and then PPI is the next day. Every now and then we see this reversal in days on the reports. But these are the key reports that tell us and the government whether the Fed policies are working. I think I think we all know the truth. And the problem is inflation may now be under control, but once prices are raised, we're always struggling with the fact that the prices are still high. So, you go to the supermarket, maybe the cost of Cheerios isn't going up anymore, but it's so much higher than what it was, and they don't bring the prices down. And that's the biggest problem that we suffer from, that normal people suffer from with inflation. It's the fact that the prices went up, they don't bring them down, and even though these reports might be good, us regular people are still suffering from inflation. And that's a problem. It's a problem that I don't know how it ever gets resolved. But prices are high for a lot of things. The cost of food. When you pay your utility bills, they're way up. All the costs for utilities are up. Housing, very, very expensive. Cars. Car market is nuts. It's absolutely nuts. The price of cars. You can buy a house, but then you can't because the price of houses is way up. So it's complicated economics. All right, we got 2 minutes. So our expectation is there will be a move at the time of the news that will put us in the market, and then the direction will change. Now, if you absolutely take a trade, right, and you have no idea what's going on because you get confused or something of the sort, and you get filled and you see that you have a profit on your chart trader and you just don't know what to do, right, and you're in a panic, you could hit the close button and exit the trade, okay? It's not the best way to exit a trade, but it is something you could do. Just, something to be aware of. And then on the trap trade, the cancel outer tier button up top, okay? If we only get filled on one tier, if it starts reversing, we may need to cancel that outer tier so we can move our stop to safety as prices reverse from our entry, okay? I will try to speak everything I do out loud. I'm not really going to watch the bond trade. It should trade itself because of the way I set it up, and it's a sim trade. So I'm watching. My trap trade. If you don't see your orders, shrink the chart. Okay, it only filled one tier, but it's not moving. It's not done yet. I'm moving an order up. Cancel the outer tier. Cancel the outer tier. Move your stop to safety. Stop to safety. Increase target down below. Increase the target. Trail your stop now, but not too tight. Not too tight. Let it reverse. Let it reverse. Let it reverse. Let it reverse. Trail, trail, going to the top of the candle. Probably too close. Probably too close, but there's nice sweet profit here. I'm going to take it. Let it trail. Let it trail. Let it trail. Top of the candle. Top of the candle. Let it trail. Sounds like a song. And there it's going to take, oh, one tick away from taking me out. Still moving down. Going to trail to the top. Too tight. I'm definitely too tight. Let it trail. Let it trail. Take a couple more ticks. Let it. Okay. $390 profit on that trade. It was very fast. Very fast. Perfect, perfect trap trade. I think we were smart. I don't have any problem in the fact that we increased our tiers. I think given the economic environment, the possibility for a big move, it was a smart thing to do. I didn't even watch bonds. I'm turning off the bond breakout. Let's get a roll call about what happened on bond. Who traded bonds? Because live is different than sim. So how about a roll call? I think bonds were a problem. They did not, I'm not positive. I'm not positive. My bonds looked like they only made target one. Doc, very nice trade. Did you do a breakout, Doc, or did you do a trap? Because when we look at the video, well, it was a big move. No matter how you look at it, it was a very big move. And very often you could have traps and breakouts working at the same time. Okay? Doc did a trap, 3 contracts. Doc's been with us for a long time. He knows how to do the trap. That's why if you don't know it, you practice. Today you had to be quick on the draw a little bit. And look, we got out today at the right time because it's reversing again. All right? We got out at the right time. Now, I'm not hearing from anybody about bonds. I know that some people traded bonds. So tell me what happened. Tell me what happened to you. And now it's reversing again. And this is what we see on this report. Lots of reversing. But the main thing is we used the right setup to start. We used the right setup to start. Um, it's like I said, the breakout was super high risk, super high risk. I don't, to my way of thinking, I would make sure that I practiced the trap trade so I could trade the trap trade on a report like this where the trap trade works very well. Okay? That's the way that I think about it. Um, I would want to learn how to trade the recommended setup. Okay? Because bonds was extra risk, not not an every month great way to trade this report. Okay? So that's why we do the trap. It's the setup we recommend. Now, we didn't even look at the news. The news looks good. Looks like the news is what the market wants. Okay? Lower than expected. That's what the market wants. They don't want prices going up. The market does not want prices going up. Okay? Okay, I'm not closing the trade room, but I want to thank everybody on YouTube. Wow, we have a great crowd of people. Folks, I've got to close the stream now. Hit the like button. If you enjoy watching us, join us. There's a link on the YouTube stream. Join us and become a member. We'll teach you how to trade this way. We'd love to do it. I want to thank everybody for watching on YouTube. We have a very nice crowd. Hit that like button on your way out, and we'll see you tomorrow for CPI. You can stream tomorrow with us. So thanks everybody, and everybody else stay in the room. Let's talk about what happened